Welcome back. I'm Pratap here. Today is 28th December 2023. If this is your first visit to our channel, please understand we are providing free training on supply demand zone price action course. And you can access all the training videos from our YouTube channel. You can visit the NeoStock channel, click on the home page, and then scroll down to the playlist supply demand zone price action course. And all the training videos starting from lesson 1.1 until the most recent video are available in this playlist. And even all the upcoming videos also will be placed under this playlist. And you can also access the link to this playlist in this YouTube video description. Or you can also access all the video links from our Telegram channel. Even the link to our Telegram channel is also available under this video description. Please make use of this opportunity. Now let us get into the discussion. So before we generate today's demand and supply zones, let us evaluate the high liquidity zones generated in our yesterday's report. So yesterday we have identified 4 high liquidity zones. The first one is a DLF, and this is a daily high liquidity supply zone. This supply zone is created in the year 2008. So from the year 2008, this supply zone. And because we cannot fine tune this supply zone, TradingView data is not available starting from 75 minutes. So we are not in a position to identify the fine tuned area inside this daily supply zone. So that's why this stock is not suitable for our trading purpose. Even then, prices did not enter inside this zone today. So the next one is Exide Industries. Here also we have one daily supply zone. So inside this I have fine tuned to 75 minutes zone. We have a drop, base candles, and again a drop candle. But if you look into 15 minutes, you will understand the structure of this zone. So let's go to the 15 minutes and look into the structure of the candles inside this 15-minute zone. All these are all base candles. Base candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Especially look into the candles inside this zone. We have only one ERC candle here. Rest are all base candles. So that's why we know by looking into the structure, that's why always I say price structures are very important. If price structures are not good, those zones will be violated easily. So that is what happened today. See, the zone is easily violated. Maybe some few pending orders are there somewhere at the top of this zone. There you have seen some small resistance, but otherwise the zone is broken easily. So that's why we didn't plan any trade in this zone. Because we know the zone is going to be violated, we never plan a trade in that zone. So that's why I didn't fine tune even the 5 minutes level. So the next one is Dr. Reddy. So we got an entry today, Dr. Reddy. So let us see how we got the entry. The zone is violated, Dr. Reddy's, but still we got an entry. And Dr. Reddy's is a 75 minutes time frame zone. So let me go to the 75 minutes. Let us open the chart. See, this is 75 minutes zone. So even then, the zone is violated. Even then, we got profit today. So how we got the profit? So for that, we need to get into 15 minutes because we have fine-tuned this area because at the distal line of this particular zone, we have identified a 15-minute supply zone. Inside the 75 minutes, we have identified a 15 minutes at the distal line of this zone. Generally, if you find any zone at the distal line, a little above or maybe overlapped with the distal line, we may find a trap. That is what we have seen even previously also. So generally, how I trade, how I do my analysis. If I find any zone at the distal line, a fine-tuned zone at the distal line, immediately my sense says there could be a trap just above that if it is a supply zone, or just below the distal line of the demand zone. If it is a demand zone, just below the distal line, you may find a trap. That is what we discussed, bull traps and bear traps. So exactly here, the distal line just overlapped with this zone, identified a trap at 5 minutes. We got a better clarity on 1 minute also. Even I analyzed it at 1 minute level also. I'll show you because this is a very good learning for you. So because this is a 75-minute zone, so we need to fine tune at the 15 minutes. So went to the 15 minutes. So in the 15 minutes area, look here, you will get clarity. You have a leg-in candle and then you have a base candle. Just move. You got a drop candle with a gap. See, the biggest problem is the visual representation of the charts. See, it looks like all these candles are looking like base candles. But you just hide this large candle. This is a very large, highly explosive leg out candle. Just hide this. Because of this candle, the remaining candles' visual representation is changed. That's why I'm hiding this entire drop candle with gap. So now you see all of a sudden. Now you get clarity. This candle is not a base candle. This candle is a leg candle. So because it is a leg-in candle, after that we have a base candle and then we have a drop candle. So this is a 15-minute zone. We have a rally base drop, a drop with gap. Maybe it is a professional gap. Why it is a professional gap? You will get clarity very soon once we look into our trades. Okay, and where we are drawing this zone, we are drawing this. See, actually this is I fine tuned to 5 minutes level. We will get clarity. So this is a fine tuned 5 minutes area, this zone that I will show you. So generally what happens when you have a zone at the distal line, so maybe a little above or overlapped with this distal line, definitely, or I would not say definitely, but 90% of the scenarios, institutions keep some traps there. The reason is our stop loss will hit, it will violate. The moment it is violated, it will hit the stop loss and immediately institutional orders in the trap will be triggered and you will keep on buying here. Buying means already you previously took a short order because you need to exit from the short order. What you do? You go for a long. Basically, it is like you exited from your short orders. Because you exited from short orders, that means you are buying. Immediately what institutions will do? They will keep on selling. All your buy orders will be captured by the institutions. That's why we are calling it as a trap. Because you are buying. Previously you short, your stop loss is triggered. So you want to exit from your trade, so you are buying now. So that means you are a bull. When you are buying, you are a bull. All these bulls are captured by the institutions. That's why we named it as a bull trap. All our stop loss orders are bulls. All our stop loss orders, that means bull orders, are captured by the institutions. So that's why we have seen already several examples, even previously also. So that's why whenever you are planning a trade at the distal line, make sure there could be a bull trap at 5 minutes level. Sometimes at 15 minutes level also you can see, but mostly you will see at 5 minutes level. If your 5 minutes is not very clear, even you can observe at 1 minute level also. Okay. Because it is a 5 minutes bull trap is there, let us go to the 5 minutes time frame so that you will understand how we are planning our trades. Let me hide so that candle structures will be proper. This is a 5 minute zone. So here we have 3 base candles, 4 base candles actually. We have a rally candle. So here we are drawing. Maybe you may consider these are all looking like even ERC candles also. Even if you consider ERC candle, the next candle is a leg candle. I mean, no, not leg candle, I mean base candle. So that's why we have drawn this 5 minute zone. And if you just before this, you can also see a trap here. We have a rally, you have a base candle and a drop candle. Drop candle is not a great leg out candle, and you have a small follow through candle. See, there is a structure here. That's why you should be very careful. If you are looking for a perfect structure, you won't get clarity. So definitely this is the area we have a rally candle. This is the base candle and a drop candle. So let me mark. You will get clarity. Let me draw the circle here. So within this area, you will see. See here the okay, fine. So this is a rally candle, base candle, and drop candle. That way I'm seeing. But you may not really agree this. If you are looking into this area in a perfect way, 100% perfect way by applying the rules, you won't get clarity. Remember, once you get your experience, you should not look into the thing exactly in a mathematical way with 100% perfection. But definitely I am able to see a zone here, rally, base, drop. I know most of you may not convince. The reason is this leg out is not great. Okay, this is a base candle, you will agree. This is a ERC candle, you can consider as a leg in, you will agree. But to accept this as a leg out, definitely you may not be convinced. So that's why I'm seeing, see, leg out is there. I'm considering this is a leg out, and after that, follow through candle. Why I'm considering this is a follow through candle? The lower low is there. Compared to this previous candle, I'm seeing a lower low. So one more candle, one more drop candle. So that's why if we are not having clarity, see, I'm considering, but still, we need to confirm really this is a zone. That's why one more time frame below you go. That is the reason why I went to the 1 minute time frame. So in the 1 minute time frame, within that marked area, you observe properly the circled area. So this is what we have drawn a circle here. See, we have a leg candle, base candle, and a drop candle. Do you accept now? Do you accept? This is a rally candle, base candle, and a drop candle. So definitely will accept. Let me delete this, you will get clarity. Let me delete this drawn zone also, so that you will see. This is a ERC candle. You have a base candle. You have a drop candle. This is definitely a valid leg out candle, but at 1 minute level. So how do you draw? Because this is a rally candle. So among these three candles, whichever the candle is having the high, that candle you need to consider as a distal line. So let me draw the zone here. You can draw the zone like this. This is a, so even you can type 2 entry, you can draw the zone like this. Even type 3 also you can draw the zone like this. Anyway, it doesn't make much difference, but already you have a zone. This is a supply zone. So I'm changing the color. So that means this is the bull trap. This zone is a bull trap, but slightly overlapped. Okay, and another reason also I will tell you. Actually, let me draw a horizontal line from where the actual orders are taking place, order flow. This is the way you can identify the order flow. See here, once this zone is created, 1 minute zone is created, see the rejections from here, how prices are falling down. This is before our 75 minutes high liquidity zone created itself, this order flow is started. Now this is our actual 75-minute zone. From this 75-minute zone, this is the high of the zone. See exactly previously where the high was there. Now also prices are coming down. That means there is a heavy order flow in this area, the blue colored area. So that is the reason why from this blue color area till the distal line of the trap, this is the 1 minute zone is the trap, bull trap. Till the distal line, you can keep your stop loss. So that means your entry is here, your entry is at 5 minute zone, but your stop loss is at 1 minute zone because both these zones are overlapped. That is the way you need to place your trade. Now let me delete this 75-minute zone to bring clarity. Now look here. This is what going to be your trade. This is the 5 minute zone. We fine-tuned inside the 75-minute zone that we deleted sometime before. Just before. So this is the 5 minutes inside the 75-minute zone, and this is the trap. So entry is at the 5 minute zone proximal line, that is type 2 entry we are taking for that 5 minutes, but stop loss we are keeping at the 1 minute zone, that is the bull trap. Why we are planning our trade like this? Because both these zones are overlapped. If both these zones are not overlapped, we would have taken 2 trades. So finally our zone is going to be like this. It is a combination of 1 minute time frame zone and 5 minute zone, both overlapped. That is zone confluence. Now look into the today's trade now. See, today the prices reached this horizontal line where actual order flow is there. Maybe we took our entry a little below that. At 5 minute zone level we have taken. But see exactly at this order flow area, how it pushed. Previously at this blue color line, we got 2 entries earlier. This is the 3rd entry today. Still this zone is, order flow is able to hold the prices. Maybe comparing to the blue color line, a little above prices moved. And then started moving down. So and finally reached the target at our 15 minutes zone. So let me go to the 15 minutes time frame. So this is the entry and finally reached the target. And after that what happened? Again prices went there, and this time it, the stop loss is triggered. After that prices sharply, after the bull trap has been violated, see how fast the prices are moving. But meanwhile what happened? We got the entry and reached our target also. So this is one point you have to observe. But one more also I will show you. But before that, let me tell you what is the profit we got. In Dr. Reddy, we got 4,525 rupees profit we got. And which is 3.54% ROI. Because the zone is very near. Because it is a newly created zone after that. The point you have to observe, initially we planned before the trade starts. This is today morning at, let me show you the 9:15. '28th. Today morning 9:15. Let me hide this. Let me show you till the yesterday's candles. So this was the position. There are two ways you can plan your trade. So we have a drop, base, rally. So we have drawn the zone. Today what happened? Prices entered into this zone and again it pushed the prices up. And after that what happened? One more rally, base, rally is created. This is a newly created. When a newly created is there, immediately you need to adjust your stop loss. Immediately you need to change your target. Earlier our target is supposed to be like this. This is the zone we are supposed to, prices are supposed to reach. But what happened during the market dynamically changed, the target is changed. That's why always I say market is dynamic, it is not static. When things are changed, when new zones are created during the market time, immediately you need to revise your target. That's why the target is revised. The newly revised target has been reached. So this is what happened. But even before that, something else is also happened. What is that something else? Because I deleted the 75-minute zone, first let me draw that so that you will understand. Where is our 75-minute zone? We have a drop candle, we have two base candles and again a drop candle. And this is the zone identified by our software. And this is a 75 minutes supply zone. Sometime before we deleted this zone. Okay, inside we have drawn this 5-minute zone. This was the zone. This is a ERC candle, base candle, drop. It is not two base candles. That's why always I say the visual representation makes problems. Software will perfectly identify. Otherwise, you have to zoom properly and then draw the zone. See, our software considered this as a leg-in, ERC candle, as a leg-in, base candle, and again a drop candle. That way we have drawn the zone. Okay, now the point what I want to explain now. Previously prices went, the zone is created, prices reached up to this order flow area and after that again prices came down. I'm sorry, something wrong. This is not the zone. I have drawn it in a wrong way. The software, what it identified is like this. This is the zone. Because this is a medium size leg-in candle. This is a medium size candle, but based on its body and wicks, this is considered as a base candle. We have a medium size leg-in candle. This medium size candle is considered as a base candle because of the wicks. And then we have a drop candle with pro gap. There is a pro gap here. See, when there is a pro gap, how do you plan your trade? Within this gap area, anywhere you can plan the trade, provided your risk should be supported. See today what happened today? Today, today morning, this is a 9:15 candle. Prices entered into this area, the pro gap area it is entered. But we didn't plan our trade. Why we didn't plan our trade? Because the pro gap area, the risk is very high. In case if the trade goes against our analysis, prices will go and hit the stop loss and go away. Even the prices went beyond the bull trap area, whatever the trade we planned. How much loss we would have got? From this particular zone till the distal line, there is going to be, we would have got maybe around maybe 8,000, 9,000 rupees loss we would have got. That is the reason why we didn't plan our trade in the pro gap area. Because the pro gap area is a huge gap is there. Okay, fine. We didn't plan the trade, but what happened? Because the pending orders in the pro gap area again pushed the prices up to the 15 minutes area what we planned. Now let me show you the 15 minutes time frame. This is the initially what we planned. Initially we planned this is our target. We have a drop base rally. This is supposed to be our target. See, prices went into the zone, the high liquidity zone. The pending orders in this pro gap area pushed the prices up to the 15 minutes area. Why I am telling you this point? Not about the trade. Make you understand the power of our high liquidity zones. Because you've been following high liquidity zones for the last 3 months. So you know the power of the high liquidity zones. But still, we should keep on observing these points. So that those people who are having some doubts about high liquidity zones, they get clarity to understand the power of the high liquidity zones. That means the price in this pro gap area, the pending orders in the pro gap area, pushed the price up to the 15-minute zone. There could be some 5-minute zones might be there in between. They are all violated. Let me show you. Prices, see there is a 5-minute zone here. There is another 5-minute zone here. All those zones are violated. This is a 5 minutes demand zone. And this is another 5 minutes demand zone. The first 5 minutes, prices entered into the pro gap area. The first 5-minute zone is violated. Generally, how intraday traders will plan? They plan, okay, from this area till the 5 minutes. Because during the intraday, most of the people plan till the 5 minutes zone. But the first 5-minute zone is violated. Second 5-minute zone is violated. But the 15 minutes zone is able to withstand. That is the power of the high liquidity. That is the reason why always we look for our targets at 15-minute zone instead of 5-minute zones. If you are keeping your target in 5-minute zone, you get very less profit margin. Maybe you get intraday profit margin. What is intraday profit margin? For most of the people, they plan between 1% to 2%. For most of the people, 1% if they get during the intraday, they are very, very happy. 2% profit they get, it is like an excellent trading day for them. I'm talking about on a single trade. I'm not talking about multiple trades. During the intraday, people may plan multiple trades. That is a different story. I'm talking about a single trade. But ours also a single trade. But our target is on 15-minute zone. And our target is most of the times 6.1% return on the investment, which is our average return on the investment. We have already calculated. From the beginning, I am selling 6.1. After 100 trades completion also in the Excel sheet, we have seen if you look into the first 100 trades in that Excel sheet, it has given 6.18% ROI. That's why always from the beginning I am keep on saying 6.1 is our average return on the investment. See the pro gap area, how it has given. But we didn't take this trade. Why we didn't take this trade? Because the risk is going to be very high. We are not in a position to bear that a huge risk. So that's why we didn't take the trade. But high liquidity zone did its job by pushing the prices up to the 15 minutes. After that, what happened? Again, the market dynamics are changed. Again, another new 15 minutes demand zone is created. See here, we have a rally base, rally, new zone is created. While creating the zone, we also got a new entry. We got the new entry. Slightly it is pierced. Okay, it is pierced, but again it came back because there is a 1 minute zone, bull trap is there. Again pushed the prices down until the newly created 15-minute zone. That is the place we need to exit from our trade. You should not look for the one we have drawn before the trading day starts. This is the zone we have drawn before the trading day starts. And already prices reached that zone. But the prices reached by giving an entry from the professional gap area inside this 75 minutes high liquidity zone. Because we cannot fine tune the professional gap area. I always say professional gap area it is like a black hole. We don't know where exactly the order flow is there. Even if you go to 1 minute also, you cannot fine tune because nothing is there. It is completely a blank area. It is like a black hole. We never know what is there inside. So maybe there is a huge order flow in this area, and today demand is also very strong. Even then it consumed, pushed the prices. Again the pending orders, again it pushed. But this time the prices went a little up. But here we have again another order flow is there, pending order flow, where we fine tuned at the 5 minutes. And it is able to withstand the demand, but slightly pierced from our distal line, slightly pierced. But in that pierced area, we have already there a bull trap is there, the overlapped. The 1 minute zone overlapped with 5 minute zone. But we kept our stop losses at 1 minute bull trap area is our stop loss. Not the 5 minutes distal line is not our stop loss. The 1 minute zone is distal line is our stop loss because that is the bull trap. Now the pending orders in the bull trap area again pushed the prices down till the 15-minute zone. Which 15-minute zone? Newly created 15-minute zone during the market hours. And that way we got our profit. And this newly created zone is having a very strong order flow. Again it further pushed the prices. This time even the bull trap is also violated. That is a different story. But by the time already we got our profit and reached the target, that way Dr. Reddy has given 4,525 rupees profit, which is 3.54% ROI. Of course, it is lesser than our average 6.1%, but still, it is a very good profit. Why I am saying it is a very good profit? Because a trade is finished in just 15 to 20 minutes. Go to 1 minute area, you will understand when we got the entry and when see here we got, this is the first candle entered into this area today at 12 o'clock 22 minutes. We got the entry and 12 o'clock 35 minutes it reached the target. In 13 minutes, that means close to say 15 minutes. Within 15 minutes our trade is finished. That means within 15 minutes we got 3.54% return on the investment. So that's why I am saying it is a very good trade. So this is one important lesson discussion about the Dr. Reddy, how we are able to achieve a profit in Dr. Reddy. And next one is MFSL, Max Financial Services. Here also we got a very good profit. Let me show you the trade. It is again a 75 minutes high liquidity supply zone. See here, we have a drop, we have one base candle, again we have another drop candle. So DBD, this 75 minutes high liquidity zone. So as usual what we did, we went to the 15 minutes area inside this fine tune. So let me go to the 15 minutes time frame. See here we have a 15-minute zone like this. We have a drop, two base candles and a drop candle, follow through candles. There is a very big move. The structure is looking good. There are higher chances. But how do we know the structure is really good or not? Obviously you have to go to 5 minutes and you need to check the structure. So go to the 5 minutes. In the 5 minutes, we have within this area we identified a beautiful rally, 2 base candle, 3 base candles, and a drop candle. So let us draw the zone now. We have a drop, 3 base candles, and a drop candle. And see what happened today. Prices entered into the zone. But before that, again, another lesson, another important lesson. How we planned the trade before entering into the zone. Okay, this is yesterday's candle. This is yesterday's candle because prices are near to this zone. Our software identified this stock. Generally, how do you plan before today's trade itself? You will plan your trade. So where is the nearest 15 minutes zone? Here we have a rally, base rally, and there is again a follow through candle. After that, this zone is keep on holding the prices. Probably this could be a 15 minutes high liquidity zone. I'm saying probably. Because of the software, other conditions also we need to evaluate to confirm this is a high liquidity zone. But at the first instance, I'm telling based on my first impression. Because it is keep holding. Keep holding is not the only measurement criteria for identifying high liquidity zones. There are other software algorithm rules also there. By considering all those factors, software will identify. Okay, but first impression, this is a 5 minutes demand zone, maybe 15 minutes high liquidity demand zone, maybe. Okay, so this is going to be our target. So this is the entry, the supply zone is the fine-tuned supply zone is the entry, and this is going to be the target. This is how we planned our trade because this is the nearest 15 minutes demand zone. So that way we are planning our trade. See, if the prices would have reached this zone, from this zone till this area, if prices would have reached, because before trade plan itself, you will calculate how much profit you are going to get. Because you know the entry, you know the target. So definitely you will plan. So when I calculated, it is giving around 19,600 rupees profit, which is 13% ROI. Rarely we get such kind of. But you may ask me a question. Do we have guaranteed to give such a huge profit? Rarely happen. In a rare situations it happen. But most of the situations what happens, prices before reaching itself again it will turn back. If that is the case, what you do? You will at least plan for your 6.1% ROI and you will mark there and you will wait. After that, by using your trailing stop loss concept, you can further wait and prices are moving further down. Follow the trailing stop loss concept, which I already explained in the day before yesterday's video, if I'm not wrong. Day before yesterday means which date? 26th, Tuesday. And Tuesday's video, question and answers, I explained trailing stop loss. After reaching your target, you follow the trailing stop loss, whatever the maximum profit we can get, you can earn, that way you can exit from the trade. That is one possibility. Because the target is very huge, there is no guarantee that prices will be giving that much return. What is our average return on the investment? 6.1%. But this is showing, this value is showing around 13.1%, 13.1%. It is almost more than double of our average return on the investment. So achieving that much return during the intraday is not practical in most of the scenarios. In 99.9 scenarios, such kind of situation is not practical. Maybe once or two scenarios such kind of incidents might happen. But what is the guarantee that prices will reach here? So that's why you can calculate 6.1% from your entry point, you draw a horizontal line, previously once I explained. Thereafter, you can use a trailing stop loss and whatever the further profit you can get, go to till that point, and whatever the profit, once the trailing stop loss concept, the 5 minutes demand zone is violated, then you can exit from the trade. That is one possibility you can plan. See today what happened. See, prices entered into this zone. See the huge rejection the moment it touched this fine-tuned 5 minutes area. Very strong rejection from this area. Because the order flow is very strong in this zone. You may ask a question, because the order flow is such a strong, can we take one more entry? We can't guarantee that one more. It may work or it doesn't work. We can't guarantee. But it is no more a fresh zone as per our rules. If you want to take second entry, that is based on your risk only you have to take. If within the same day, intraday, if prices reached second time, there are higher chances of executing. That's why during the intraday, mostly we take maybe second trade if prices are entering. Because during the first trade, you might have got already some profit. Even stop loss is hit in the second trade, you are in a position to bear that loss. Because already you got a successful trade. But if it is tomorrow or day after tomorrow, again prices are entering, can I take a second trade if you ask me? My answer is, that is at your risk. Because as per our high liquidity zones, once a zone is tested, we will leave that zone. Which zone? The fine-tuned, the lower time frame, 5 minutes level I am talking. But high liquidity zones supports multiple times. If this 5 minute zone is a high liquidity zone, then you can take second trade or even third trade, it will support. Okay, anyway, it reached. And see what happened today. Now after that, a new zone is created, a new 15-minute zone. When a new 15-minute zone is created, then your target is changed now because market is dynamic. Who knows? A new 15-minute zone is created. So at 12:45 candle, this is the 12:45 candle. The 12:45 candle prices reached the newly created supply zone. That is the place you need to exit. Because you never know. There are two possibilities. This newly created zone again push the prices up. Maybe this zone, entire supply zone might have been violated. This entire 75 minutes high liquidity zone also might have been violated. Then you would have got loss. That is the reason why you need to exit. From this point, you need to exit. Even if you exit, it has given 12,200 rupees profit, which is 8.14% return on the investment. But after that, what happened? Instead of prices go above, this supply zone is violated and reached the one we actually drawn initially before the trading day starts. That's demand zone it reached. But by the time we already exited from our trade. You may ask a question, can we use trailing stop loss? You can use. But what happens if market is again reversed from here? Maybe somewhere here some 5 minute zone might be there. Let me show you any 5 minute zones. Yeah, maybe this 5 minute zone is there. So here at this distal line you might have exited. Then your profit margin is only up to this area, from here to here. Let me draw a horizontal line. In case if prices went up, started moving up, let us assume after reaching this demand zone, if you want to apply, instead of exit from your trade, if you want to use trailing stop loss, at the blue color line you would have exited. Then your profit margin would have been reduced. Maybe it could have been maybe some 6,000 rupees or 7,000 rupees instead of 12,200. But those who implemented trailing stop loss, probably you would not have exited. So prices came, none of the 5 minute zones are violated. Finally, it reached our initial target. And here you might have exited from your trade. That way you would have got 19,600 rupees profit, which is 13.1%. Anyway, these are all the different strategies, but I am considering this trade as a 12,200 rupees profit, 8.14%. Because trailing stop loss, all these are all the additional concepts to manage your profits. So that way we got two successful trades today, Dr. Reddy Labs and MFSL. DLF is totally invalid and Exide Industry is also invalid at 15 minutes. That's why we didn't fine tune, because 15-minute zone is not there. We have only seen some around 9 or 10 base candles inside the zone. That's why the zone is violated easily. So this is about the trades, high liquidity zones we identified yesterday. So it's a very good learning for you, this today's analysis. Now let us generate our demand and supply zones for today's data. So let us generate demand and stocks near demand and supply zones for all the time frames starting from yearly time frame. Mostly you won't get yearly zones, but still we don't know. Sometimes if we get, we don't want to miss. So no yearly demand zone and yearly time frame, stocks near yearly supply zone. So no stocks near yearly supply zones. Okay, now let's change our time frame to half yearly time frame. Let us find the stocks near half yearly demand zone. So one stock is identified, that is Delta Corp. Let's go back. Entry time frame is half yearly. Let us find the stocks near half yearly supply zone. So one stock we identified, that is UPL. Let's go back. Entry time frame is quarterly. Let us find the stocks near quarterly demand zone. So one stock is identified, Syngen. And quarterly time frame, let us find the stocks near quarterly supply zone. So three stocks are filtered, which are near quarterly supply zone. Let's go back. Now let us change the time frame to monthly. Let us find the stocks near monthly demand zone. And three stocks are near monthly demand zone. Let's go back. Entry time frame is monthly. Let us find the stocks near monthly supply zone. So one stock is filtered. Let's go back and change the time frame to weekly. Let us find the stocks near weekly demand zone. So two stocks are filtered. Let's go back. Entry time frame is weekly. Let us find the stocks near weekly supply zone. So two stocks are filtered. Let's go back. Now let us change the time frame to daily. Let us find the stocks near daily demand zone. 8 stocks are filtered. So any high liquidity demand zones? So no high liquidity demand zones. Even today also we didn't find. So let's go back. Entry time frame is daily. Let us find the stocks near daily supply zone. 4 stocks are filtered. Any high liquidity supply zones? We have only one high liquidity, that is sale. But remember, look into the trend. HTF, ITF, LTF, all are uptrend. And also it is high on the curve. Location is favorable, but trend is not favorable. Look into the direction also. Direction is I am yet to release the video. Probably in another 2 days I will be releasing the video. So let's go back. Next entry time frame is 125 minutes. Let us find the stocks near 125 minutes demand zone. These 4 stocks are filtered. So let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. These 6 stocks are filtered. Let's go back. Let us go to the 75 minutes time frame. Let us find the stocks near 75 minutes demand zone. These three stocks are filtered. We don't have any high liquidity 75 minute zones. Let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. Three stocks are filtered. No high liquidity supply zones. We have one, but that is already pierced. It is already pierced 5 times. That means you may find a trap just above that. But you need to look the trap, the bull trap, how many times it is already tested. Or maybe any high liquidity zone might be there a little above that. But anyway, we don't have any valid high liquidity zones. That means in overall we have identified only one high liquidity zone, that is sale. That too, the daily time frame it is there, daily supply zone. I'm not sure you will get any trade tomorrow, high liquidity zone trade. Maybe it is a rest day for tomorrow, those who are trading based on high liquidity zones. Okay, let's go back. Next one is a 25 minutes time frame. Let us find the stocks near 25 minutes demand zone. Only 3 stocks are there. Let's go back. For 25 minutes time frame, let us find the stocks near 25 minutes supply zone. 12 stocks are filtered. So let's go back. Entry time frame is 15 minutes time frame. Let us find the stocks near 15 minutes demand zone. So these 4 stocks are filtered. So let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. So these 4 stocks are filtered. So let's go back. Let us change time frame to 5 minutes. Let us find the stocks near 5 minutes demand zone. These 4 stocks are filtered. So let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes supply zone. So 7 stocks are filtered. So this is about stocks near demand and supply zones for all the time frames. I hope this information is useful to you. Let us meet again in our next video. Thank you.